Hey everybody, Dr. Tom Carr here of drstocks.com. That's drstoxx.com. And our sister site, drstockstrading.com, drstoxx trading.com. Hey, I wanted to let you know very briefly today about a very unique opportunity I think everybody has now in a stock. Let me get it up on our chart. ICHR is the ticker symbol. It is Ichor Holdings. It is a semiconductor in the engineering space and doing a lot of really cool, unique things, sort of low energy things, alternative energy, green energy kinds of applications with their semiconductors. Anyway, it's getting a lot of press. But what I like about this IPO is that from a technical perspective, it has a lot of good breakout potential here with a very, very sharp and I think unfair pullback on the part of investors. A lot of folks sold out into earnings last week, and then when earnings were announced, they were good. I mean, they weren't great, but they were good. They beat on the bottom line, which is the important line to beat on, and then of course they missed just slightly on the top side, and their forward guidance was within the range of expectations. So it was good, not great, and for that reason they got punished. Now the market was also sharply down last week, and the Dow was down over 10% the last 6 trading sessions. So it was a really sharp selling market environment for the stock. And I think what that has done is it has set up now a very unique buying opportunity in this very, very good company going forward. Now, a lot of good technical things going on here. You've got the stock trading down at a key area of pivot support. You've got oversold in the MACD. You've got oversold in a fresh buy signal in stochastics, and that's on the 14-period stochastic. And you've got this high volume flush out here around $20 per share, which signals to me a lot of weak hands getting out of this market. So with all that selling done and behind us, we should be ready to build a base down here between 20 and 24 over the next couple of weeks, and then move up sharply from there over the next few months. And I'm seeing this stock in the low to mid 40s in maybe by the end of the year. Let me show you what a couple of other sites are showing for ICHR. And we go to finviz.com and take a look at the fundamentals of the company. We are seeing some very low valuation metrics. We've got a price to sales under $1 per share, so every dollar of investment you're buying, it only costs you 86 cents for every dollar of sales to buy this company. The PEG ratio is way, way down there, and that's because of this huge growth spurt over the last year, 800% in bottom line earnings over the past year for this semiconductor company. Debt is at a very low, reasonable level. All the analysts are at buy or better. They have a target price around 39, but I think that's undervalued. I think we're going to see mid 40s sometime by the end of the year. So I like this stock going forward. This was a stock in the IBD top 50 just last week before earnings. Earnings knocked it down. Now IBD places a lot of value on relative strength, and so its composite rating of 71 knocked it out of the top 50 because of this low relative strength number. But as the stock rebounds, you'll see that number come back up. EPS rating is as high as it can get, 99 out of 100. And the SMR rating, which I put the most value on, is at an A, so it can't get any better than that. SMR stands for sales. We got strong sales growth. We have very good margins for this company, and the R stands for return on equity, which is also very strong here. So this is a great buy going forward. I actually had a half position heading into earnings, and then I added back into a full position on yesterday's dip, and a little bit more added today. So I'm actually over 100% invested in this company, which means I only put 2% of my total portfolio value into any one position. So I'm at a little bit more than 2% of my portfolio in this stock. I like it that much. This is a good stock going forward, a good long-term buy as far as I'm concerned. Now, you might be watching this video 6-8 months after I produced it, and the stock is down in the teens. Who knows? Anything can happen. So be sure you put in a stop loss, and I would recommend a stop loss down here below 20, somewhere around maybe 1850, 1875. Give it a little bit of room. And I wouldn't start trailing that stop loss up until it closes above the 200 period moving average. That's the purple one. And then I would trail it again once it gets up above the 50 period moving average, around $28 per share. All right, that's it for today, guys. God bless everyone, and we'll see you soon. Bye now.